Your next step toward financial freedom isn't earning more. It's making every dollar laser focused that you make.
Moving forward with the Decker team. Moving forward together with the Decker team.
We are delighted to have created for you free access to over 703 Life's Inside Track episodes, where we share insider tips, making house home, building wealth wisely through real estate. And if you haven't subscribed to the Decker Team YouTube channel yet, you want to, especially in this particular journey, because it's an 8-week journey. This is number 4, segment B of the session 4, or episode 4, I guess we'd call it. And there are going to be 8 in total. So if you're hearing us reference something, you might want to go back to a different episode or a different segment, even in this episode, and glean all the information that's available. And if you haven't already read the Wealth Formula, you can still read it and catch up with us, because we're actually referencing the Wealth Formula book and then expanding on the concepts that we have learned over the last 13 years since we wrote that book.
Mm-hmm. And the concept we're going to talk about right now is one of my favorites in the book. And it's interesting because, the book is a fictitious book, but it's made up of many stories of many people, ourselves included, some of the mistakes we made, some of the great things we've done to apply the Wealth Formula to change our financial situation.
And then other people we've worked with and other people we've observed in relation to the 20 years that we practiced a lot of these principles before we actually wrote the book.
Yeah, and one of the concepts, and we'll talk about it a little later, is increasing your income, your revenue. The problem is that accelerating your earnings until you understand these concepts is just counterintuitive, because what happens is you accelerate the amount of debt you have, or at least that's what happened with us. We just kept earning more, and earning more allowed us to accumulate more debt and accumulate stuff faster.
Because we got better credit, we got better access, and so the thing just spiraled out of control until it truly was out of control.
So in session 2, the second in the series, the 8 series, we talked about FACE, financial awareness creates empowerment. And really that's about, where's your money going? Where do you want your money to go, right? And it's part of the laser focus debt elimination. Now, notice I said debt elimination, not debt reduction. Because what we used to do is we'd hit a point of, we got too much debt, right? Let's stop spending. We're going to stop spending for 3 months, 4 months. We just say, we're going to stop spending. And we'd stop spending. We'd start paying our debt down. And we do what I call the shotgun effect. We'd have several credit cards, and we'd throw a couple extra $100 on this one, a couple $100 on that one, a couple $100 on that one. And then once the pain diminished, once it got down, our spending habits returned. Rather than saying, no, big D decide, and we've talked about that, maybe a year ago or so, what a big D decision is. It's that you're not going to get consumer debt. That's a big D decision. And then now it's eliminate, not reduce.
Right, and so we're going to go through a strategy. Before we get there, I learned a new thing from a client just a couple of days ago, which was fascinating. She is on this approach, working to eliminate her debt, and it's debt that has followed her for over a decade, pay down, increase, and she got herself in a situation where her credit limits were exceeded on most of the credit cards. So we coached her on how to focus on one, which we're coaching you right now. Focus on the one credit card or the one loan that has the smallest amount of debt, not the smallest interest rate.
Or not the highest interest rate
Or
either.
not the highest
It's
interest
about
rate.
the balance. We want it to be the smallest balance so you see effect quickly. Now, that doesn't mean don't stop paying your minimum payments on your other debt. You
Keep
must
going.
do that. You got to protect your credit, because there is a thing called good debt. And for good debt, you need good credit.
Right. What happened for her, though, is we finally got her to the point where she had paid off the one credit card, which was extraordinary and fantastic. And ideally, from a credit score perspective, you want to get rid of one at a time because it creates new habits. From a credit score perspective, you initially want to get them all under 50%. So depending on what you're looking to accomplish, there might be a slightly different strategy that we would employ.
Yes.
Or encourage you to deploy. Regardless, when she got that credit card paid off, a funny thing happened, which had never happened to us before. Her access to credit was reduced. So her credit limit was reduced significantly. So she could never go back up there.
Right. So basically the bank's saying, oh, your credit score is low. This has the potential of being bad debt, even though she had never missed a single payment.
Never missed a minimum payment. Ever.
Then they said, oh, well, you've reduced it. Now we're going to reduce your credit because we didn't feel comfortable with you having that credit so high.
Because of what was happening with your credit score, not because you weren't making payments. So there's so many factors to think about. But bottom line is you want to find your lowest balance and just find money. Whether it's when you go back to one of the other episodes and it talks about selling everything that you don't need, everything that doesn't bring you joy, get rid of it. Find money. And instead of the shotgun approach of putting extra on a bunch of cards at once, take all those extras and put them all on one card until the balance is down to zero. Yeah.
And then once that's zero, what you do is you take what you were paying on that, add it to the next lowest balance one. So now you're giving the minimum plus that extra money that used to be paying off the other debt. And it starts to accelerate. And this laser focus on individual debts. Yeah. The other thing we talked about is celebrating. And each time you pay off a debt, it gives you an opportunity to celebrate. It changes the endorphins and everything, right?
And helps gain momentum and motivation stays high. Of course, don't let the celebration exceed
what you can pay cash for something.
Well, and exceed sometimes people say, well, I went on a great trip and now the credit card is at risk again. It's to still stay with the strategy. And so find a celebration that fits the accomplishment, not exceeds it.
Yeah. And if you want to get some personal advice, maybe you want to book a 15-minute clarity call that's designed to help you on your wealth journey. And you can just go to our website, deckerteam.com. That's DEKKERTEAM.com. Go there, book a 15-minute consult with Yetta or myself. It's free. And it may just be the first thing to give you that little nudge the way you need to go.
And then once you get rid of a certain amount of your credit, you might want to start cutting up some of the cards. Now, a neat thing to do is consult your credit company, your credit card company. So what happened to our client the other day where her credit score actually went down further because if she uses it again, then she's in trouble again from a credit score perspective. So reality is you want to actually include your creditor, your credit card companies, potentially in your restructuring strategy. You don't have to go rogue.
Yeah. And the moral of this story is that small victories actually build big momentum and big freedom. And that freedom stays when the debt is gone for good. And we're all about clarifying your options because when your options are clear, your wisdom will flow.
Moving forward with the Decker team.